Joining us now to discuss the headlines and more is Bill Barhydt, CEO of crypto trading platform Abra. Hello there, Bill. Always a pleasure. So what kind of trends are you seeing on Abra that might lend an explanation to what is behind Bitcoin's rise right now?
Well, so we've certainly seen a lot of crypto leaving exchanges and getting locked up, whether it's in hardware wallets or in some cases, yield generating services like Abra. So we've seen a massive influx in deposits over the last 6 months, while exchanges have seen a net outflow, except for a short time frame when we saw some concentrated selling, maybe in early December. So by and large, I think that we've had a supply shock, and that supply shock has continued. And during this kind of extended accumulation phase, the question has always been, all right, it's clear that we have a supply shock. What's going to basically be the push that takes us kind of out of this wedge pattern that we were in, this accumulation phase that we were in? It was clear, if you go back and look at historicals on any type of kind of invasion or the beginnings of most conflicts, markets tend to move higher. If you look at scenarios where markets are expecting significant rate hikes, usually for the next 12, 18, 24 months, markets tend to move higher, right? Especially in this model where you've got a whole bunch of free money and liquidity still coming into the system. So I think this kind of initial fear of rate hikes basically, leading to risk off or basically having a hangover on Bitcoin, I think that was all unfounded. And the technicals basically said, okay, we're basically still in a macro bull trend. The network effects are still there. They got delayed because of China. What's it going to take to get this kind of back on track? I think now, you mentioned earlier, I heard some talk about what's happening with Lunaterra. Clearly, that's a fantastic story, kind of reminiscent of both Grayscale and MicroStrategy happening 18 months ago at the same time. Now I'm hearing about Grayscale potentially suing regarding an ETF and forcing their hand, and you're talking about potential for a lot of new money coming in there. We're seeing tremendous institutional interest that we didn't see at this point last year. Last year we saw a lot of family office, high net worth money. So there's a whole bunch of things now that I think are pointing towards very positive momentum for Bitcoin. And then, of course, on Ethereum front, and we don't know which one is going to lead which. With this upgrade happening and the amount of Ethereum getting locked up in ETH 2.0 and the merge coming, all of these things are super exciting for the greater crypto narrative.
There's a lot in there that you mentioned that, with the Terra Luna Foundation, the Luna Foundation Luna Foundation Guard buying up Bitcoin, first stablecoin to use Bitcoin as a reserve asset in potentially up to $10 billion. We'll see how that goes. You mentioned institutional interest. We've heard from Goldman Sachs, Bridgewater Associates, as well as Blackwater, interested in either a crypto fund or opening some sort of crypto services. And I found it interesting that while we see crypto exchanges losing some cryptocurrencies, you're saying that clients are putting Bitcoin and other cryptocurrencies on your platform. What are they doing with it on there?
Well, generally, they're doing one of two things. They're earning yield, meaning they'll deposit Bitcoin and they'll get up to 8%, depending upon kind of their member status in Abra, 3% in kind, 5% in rewards currency. They're also borrowing against it, right? You can use it as collateral. Right now, we'll do a free loan up to 15% of the amount of your Bitcoin and Ethereum held in Abra. If you want more than that, you can go up to 50%. You'll pay an interest rate, but we'll actually give you a 15% loan to value ratio loan right now for free. And so
right.
A lot of people
putting it to use.
Absolutely.
Also, Bitcoin dominance has risen from about 39% since January to about 43% today, when it looked like global uncertainty was mired by inflation talk, interest rate hike concerns, and geopolitical tensions between Russia and Ukraine were heating up. Now, analysts reasoned back then that there was a natural flight to Bitcoin in the crypto markets because it was more of a mature asset in the crypto world. Yeah, I heard you believe Ethereum will flip Bitcoin. Tell me a bit about that.
So I don't put a lot of value in the market dominance. I never use the term flippening or flipping. I've never said that. I think that Ethereum could potentially see a massive melt up bigger than Bitcoin. But I don't really necessarily in my mind correlate the two other than when I'm thinking about investment money. And so what I think is happening is I think the network effects for Ethereum in the short term are stronger than the network effects for Bitcoin, right? In the short term. Right? And they're totally different. They're unrelated network effects. So Ethereum is setting itself up to be the world's computer. It's being used by stablecoins and NFTs and DeFi and the future banking services. Bitcoin is simply the best hard money we've ever had. And in the short term, I think those network effects on that world computer narrative are stronger. And as a result, I think Ethereum could easily see a 10x run over the rest of the year, if not more, and going into next year. I don't have a crystal ball. Maybe it doesn't happen. But when you have those network effects and your asset is becoming deflationary, which is what's happening for Ethereum, I don't see how you don't get a significant run up in price and value. Usually that's the correlation between.
What do you think is is the fair price for Bitcoin and versus a fair price for Ethereum, where it should be at?
Well, Raoul Pal had a great analysis on value moved versus the number of people moving that value. And what that means is large institutions discount the network effects because they'll move $1 billion at once versus 1 billion consumers moving $1. Okay, we'd rather see, in terms of the overall value, I'd rather see 1 billion consumers moving $1. And so what's been happening the last couple of weeks is consumer money's coming back in. Right, that's what was missing in Q4, and so I do think that you're going to basically retest the highs at the top of the channel, and then what it comes down to is what is kind of the macro state. What does that resistance do to the overall market? Do people simply get afraid and take profits, which is what happened in whenever it was October, November, or do we actually break through and the retail money keeps coming in? Because I know at 50,000. Right. And your peers and the other publications start, wow, Bitcoin's back and all this nonsense. Retail investors start coming back in and it becomes a self-fulfilling prophecy. The question comes then, what happens when you get to the top of the channel and you're talking about new highs? Does the smart money start to basically take profits, or do we break through and retail just keeps buying and buying and buying? That's going to happen at some point. It's going to happen. Mm-hmm. I don't know if it happens this time or there's a pullback to 50 and then it happens next time. And honestly, I don't really care that much because I know where this is headed. And then, my Ethereum narrative is a little bit different, right? Because Ethereum is being taken out of circulation right now, and yet you need it to run these DeFi services, NFT services, et cetera, et cetera. And so I think that with potentially 12% cash flow profits on ETH post-merge, and I think that's going to drive a short-term influx of staked and locked Ethereum, which would create a supply crunch.